What's up everyone, it's Caddy with Moneyvesting. Welcome on board for another Market Open live stream. After quite a while, we do have the CPI numbers, inflation numbers coming out today in under 15 minutes at 8:30 a.m. Eastern. If you guys can see me and hear me, just give me a thumbs up. Just want to make sure the audio and the video is working well. So let's get started. I'm super excited for the inflation numbers today, and of course, talk to you guys as well because it's been a while, right? So I've missed you guys a lot. So again, just give me a thumbs up in the chat if the audio and the video is working well. We do have QQQs right now up over 74 basis points. Last week was red. This week so far has been red, with the Nasdaq dropping over 1.1% yesterday. And of course, we do also have SPY pushing higher a little bit, up over 62 basis points, with the Dow Jones rallying over 0.5% as well, with the 10-year yields now dropping once again back under 4% ahead of this inflation print. So perfect, sounds great. Great. Good morning, everyone. Good morning, good afternoon, good evening, wherever you guys are watching from. Thank you so much for joining. And let's just dive right into it. So CPI expectations, as we already know, by the way, we do have a poll going on right now. Make sure that you do participate, vote if you haven't already. But the consensus right now, month over month, is going to be 0.2%. And year over year, 3.3%. So we're going to see a little bit of an uptick when it comes to headline inflation, and core expected at 0.2% also, but year over year expected to stay steady at 4.8%. So obviously, if you come in a little bit higher than what the consensus estimates are, then the market can get spooked a little bit. And obviously, that's not going to be great news. And we could see that breakdown below the 21 EMA. By the way, I posted the market update a little too late because, again, I'm still trying to work through the time zone differences here in Dubai. And for those reasons, obviously, markets open here at 5 p.m. and they go all the way till midnight. So market updates, I did post a little bit later, but it is a super, super important video. Definitely highly recommend you guys check that out if you haven't already. So you basically go on the channel, and it's going to be this one right here. So right here, that's the market update six hours ago. Definitely check it out because it will give you a little bit of an insight into the technicals of the market as well. Not just the S&P, the Nasdaq, and the indices, but individual stocks as well, because we're very, very critical, like at a support here, that if it breaks, we got to be ready. We got to have some risk management in control, and of course have covered calls to hedge to the downside. And that, of course, that acceleration of that sell-off could potentially get accelerated. So definitely do check that out if you haven't already. I did post it a little bit later, but of course now everybody is up, so you can check, you can watch it. So I think the poll is wrong. I see 4.8%. Yep, so 4.8% is for core, right? Core CPI, that's the expectation, Milan. So ex food and energy, you see year over year, 4.8%. So the poll really is asking you if core CPI today will come above 4.8, at 4.8, or below 4.8. That's the poll. That's the expectation from of course the market. And we've talked about energy prices. We've talked about crude. And we've also talked about gas prices over in the US, and right now they're sitting at $3.82, which is, very similar to what we have seen over here if you come over to the gasoline prices. And this again is going to be on the weekly basis, monthly basis. If you take a look, $3.82 per gallon is the US retail gas futures. That's almost identical to what we have here, right? Today's AAA national average. That is the price that you're seeing over here. In the month of July, we actually saw prices up over 10%, right? Why? Because crude oil was up. Crude oil is now at $84 a barrel. And of course, in the month of July, it was up over 16%. So that is obviously going to be very, very important, because if crude oil was up, gas prices were up, which obviously leads to potentially upward pressure on inflation as well. So that is something that we obviously have to pay attention to. And that's number one. Of course, food prices is going to be second. And not to mention shelter prices is another wild card for inflation as well. So again, this right here is going to be the consensus. We're going to be ready to take a look at that report as soon as it comes out at 8:30 a.m. Eastern. And we'll obviously take a look at the market's reaction as well. So right now we are starting to push higher a little bit. But technicals, we're very critical at support here at the moment. So, thank you so much for joining, everyone. Fernand Diaz, hi, Caddy, has your intrinsic value changed on SMCI based on last results? It is currently trading below your valuation. So, yes, we'll take a look at that in just a minute, and we'll actually do a video. I'm planning on doing a video on SMCI here very soon. And that's the thing with company earnings, right? Because the next question goes perfectly with that, right? So Andres is asking why SMCI went down right when they beat on both earnings and revenue, right? So it's market psychology, right? So that's the same thing that happened with Enphase Energy. Whenever there is an element of surprise on either direction, you will see the stock move violently, right? So in this example, SMCI, and of course that's the surprise element, but then of course if your expectations are too high or too low and they are not able to meet those expectations, then obviously the stock price moves pretty aggressively as well. SMCI grew revenues, grew earnings, right? They were both really well, right? They beat on EPS, they beat on revenue, they both grew very, very nicely on a year-over-year basis, and yet the stock price dropped over 23%. Why? Because the expectations were so high. The bar was set so high and they weren't able to basically, I think it's something to do with the guidance as well, right? So guidance was not able to keep on pace with of course, the expectations, and not to mention the valuation got a little bit ahead of itself as well. So we talked about how companies, when they do rally a lot, there needs to be a reset in valuation, and the same thing happened with Enphase as well. No move is going to happen forever, right? Think about it, right? SMCI is up from April since the day we talked about this in the $80, $84 per share. I believe the video actually came out back in March. I remember doing a video back in March when the fair value was in the $86, $87 per share. From those levels, it's rallied over 300%. That is an insane amount of rally, right? Not only have we seen valuation multiple expansion, but of course, we've also seen revenue and earnings growth here. But now, again, we've got to a point where the valuation got a little bit more stretched, and now, of course, it's starting to sell back down. Now, that being said, again, I would put down a support roughly at around 213, 214, and correct me if I'm wrong, but I think the fair value was in and around some of those levels, right? So I think it was in the 200s. I think that was updated to 200s as well. All right, so let's see. Kendall, Caddy, you're the best. Started small position in technologies. Thoughts on Mara? I read they were considering a drastic share increase. Do you know if this was approved? So I don't know for sure. I know that they are going to be reporting earnings here very soon. They're up a little bit over 1%. In fact, I think it looks like they missed on both EPS and revenue. The stock price is not moving all that much, but I'll definitely see if I can do an analysis or a video on this stock in the future. But looks like B. Riley raises price target on Marathon from $8 to $11 per share after modest Q2 miss, keeps neutral rating. But we'll definitely see if I can do a video on them very soon. And of course, a lot of it depends on the price of Bitcoin, right? Because that's really what they're mining. And at the end of the day, if the price of Bitcoin's higher, Marathon's going to be higher, they're going to be making more money. And analysts also reaffirms buy rating with a $20 price target on Marathon as well. So we'll definitely do a video on this company as well. They generated almost 3,000 Bitcoin in the quarter, which I think is also a pretty substantial increase on a year-over-year basis. All right, let's see. Shadow Bro, you're the best. All this research, I keep up all the hard work. Much love. Thank you so much. I appreciate it, and really, I think I'm glad to hear that all this content really helps you a lot, and that's really the whole point. Is just being able to provide a lot of the quality content, a lot of stock analysis and videos for us to look at the companies, companies that we haven't really talked about, right? That's the goal of this channel, is to find underrated companies that haven't moved much, right? Similar to what we saw with SMCI. Back then, back in April, back in March, when we were doing the videos, when we were doing the analysis, there was really, really low valuation, and the forecasted earnings growth was over 100%. The forecasted revenue growth was over 100%. So the growth rate was very strong, or was expected to be very strong, and yet the price was trading like a value company, right? The stock was trading like a value company. So that's where the potential was, and of course, it went from like, $4 billion, $3 billion, $4 billion company to over 13, almost $14 billion company as well. So very, very strong momentum coming in for SMCI. So that's the whole point, like trying to find companies that are very in the similar category of SMCI. Um, Nice to have you back. I miss my coffee and caddy in the morning. Thank you so much, and it's really, really fun to be back and be able to talk to you guys because again, my family was visiting, and we did a lot of things. Like I actually showed them around. For the last 5 days, I've just been spending time with them. And as I said in my one of my previous videos, is that just book that family vacation, right? Just go with your family, travel because you're never going to regret that, and it's those memories are gonna stay with you forever. And just like look, just watching my parents on a camel doing those camel rides in the desert was so fulfilling. It was so wholesome because yeah, I mean I've been traveling a lot, but my parents, I mean my dad went to Europe last earlier this year, but my mom, she hasn't gone to a lot of places like in the last, like she hasn't left the country in 8 years, right? So I wanted to really just take them out on a vacation, just have it be like really relaxing and just enjoy and stuff. And it was a really good time, so I that's something that I definitely recommend everyone to really look into is like, when you do have the time and you can take a week off, just go out with your family, just have a vacation or something. So um anyway, let's see. Caddy, Novo Nordisk worth more than Denmark's GDP. Yeah, Novo Nordisk has been doing really well, right? So NVO. Get married and enjoy more. So yeah, we did a video on this, right? NVO. It actually rallied after the earnings came out. We talked about this 17% rally to the upside. Of course, a very, very strong move to the upside. Of course, it's a quality company. I think it's got a lot of potential, but of course, valuation is going to be important, right? That's something that we have to analyze. We have to understand that we don't want to overpay for a stock, regardless of how the quality of the company is, right? It can be the best quality company out there, but if it's trading at the wrong price, it's the wrong price, right? We're not going to force ourselves into a trade or into an investment regardless of the quality of the company, right? You could have the best house on the street, right? The perfect house with the great development, great architecture, great like different specs and square footage and whatnot, but if it's selling at the wrong price, you're gonna have to pass up on it, right? Because you don't want to overpay for, even if it's a quality asset. So our goal is to find great companies at great prices. I mentioned before, that's our goal. We have to combine those two things. So with NVO, I think it's a great company. Pricing wise, I think it's still got maybe a little bit, especially after this push higher, it's still got some more potential to maybe see some more all-time highs. Support level is going to stay put down to 172, but of course my fair value is going to be a little bit lower than obviously where it's trading at the moment. Beautiful. I think Bear is about to come off today. Beard, you mentioned? No, it's gonna stay now. It's gonna stay for forever. I think it's gonna stay here for a very long time. I don't think I'm gonna ever. Caddy quickly passes up on the marriage comment. I smell family pressure. Yeah, no, they've been on me for, I would say, the last 6 months, but no, I think I'm gonna take my time. But no, you guys are all invited, obviously, through a live stream. So it'll all be streamed live. Don't you worry. When I get married, it'll all be streamed. And you guys are all invited, obviously. It's going to be super hilarious. It's going to be such a funny wedding. Let me see. So, okay, we got less than 5 minutes left for CPI numbers to come out. I'm gonna do a quick audio check. Yields are definitely dropping quite heavily, under 4% now. And of course, we'll take a look at the market's reaction, the CPI itself. Make sure that you drop a like so that we can get more and more people involved. So drop a like, of course, share the stream with other people that might be interested in of course, taking a look at the inflation numbers live and the market's reaction as well. But right now, QQQ's strongly pushing higher, up 78 basis points. We got the SPY up 60, and we got the Dow Jones pushing up about 58 basis points as well. With Tesla here up 0.5%, Meta Platforms up 0.5%, Microsoft's up 86, and Apple here up 0.5% as well. Apple's got a very critical support at 177. The moment it breaks, I think it's going to be quite interesting whether the market holds up or not. I think it's got maybe some more potential downside, of course, if it does end up breaking. Only 215 votes, and we've got 410 people watching. So that's like only 50%. We need to see at least over 300 votes here in the next couple minutes so that we can get a good data set on what everyone's expecting. Right now, 40% people expecting the CPI, the core CPI, to be over 4.8%, which obviously is not going to be great news for the market. And that's obviously going to potentially increase the probability of maybe rate hikes in September. The next meeting is in September. It's in the next 41 days. So we got plenty of time. plenty of time for the Fed to evaluate the situation, evaluate the economy, and analyze the incoming data, including inflation numbers that come in today. So I'm actually curious about what energy prices are going to look like. So I think that's going to be the main driver, and of course, not to mention rent and food prices as well. So 1 minute, folks. So we're gonna quickly do an audio check here. Just let me know, and let me know if it's working, and we should be all set. So we'll just put that over here. And then there we go. We'll just do that. As soon as they return, they should be live. And we're gonna obviously switch over to the QQQs, the SPY. There we go, we got a minute left, less than a minute.
The motor control.
Let's do this.
Welcome back to Squawk Box on CNBC. 30 seconds away from the July CPI report and the jobless claims number. Let's just get a look at the markets. Dow's up 184 into the print. The whisper is dovish. I'll quote Andy Brenner at Nat Alliance. Whispers 4.6 for the core, maybe 3.1 on the headline. So expectations are pretty muted in that direction. And we've seen the 10-year Treasury yield below 4% in anticipation of that. 385, that's the level Rick would be watching, and some others, to see if we're not going to retest the highs. But if it comes in hawkish in 2 seconds, that's all out the window. Rick Santelli, how does it look?
Well, let's start out with CPI, shall we? Our July read up 0.2%, exactly as expected. And if we look at core, also up 0.2 as expected. And what's noteworthy about this, it's the second month in a row, and I don't see a revision yet, where core is up 0.2, which means it's the third up 0.2 since the highs going back to 1981 were established up 0.8. That was in April of 21. We haven't been at a lower level since February of 2021. Now, let's look at CPI year-over-year numbers. 3.2% on headline, 3.2. That's 0.2 higher than the 3% in the rearview mirror. And that 3% in the rearview mirror was the lowest since March of 21. So that's moving in the wrong direction. And if we look at year-over-year core, arguably the most important data point here.
4.7.
4.7, exactly as expected, and 1/10 less than the rearview mirror, which was 4.8, which was the lowest since OC of 2021. And, well, at 4.2, OC of 21, and we're still hovering there because 4.5 is the number. Now, even though 3.2 is higher, Kelly, than the 3.0 in the rearview mirror, there is an asterisk here. The fact that we are expecting a number actually even higher than that at 3.3. Because if you look at interest rates, we haven't moved that much. We were basically at 397 and 10s. Right before the number, you get that pre-number panic. We moved down to about 395. We're trading at 396. If you look at a 2-year note, arguably maybe a better gauge right now, it's at 473. It was at 476 prior to the number. That was down 5 basis points. So, of course, now at 72, you had another 3. We're down 8 basis points. If you look at pre-opening equity futures, the Dow futures have improved here. They're trading well over 225, on their way to 250. So the data points, even though we had that one glitch on year-over-year headline, it certainly seems to be falling in place. And there are a lot of moving parts here as everybody tries to monitor how all this affects interest rates, the yield curve. Long-dated Treasury's been a little bit more stubborn on their yields, although they've come down. And to those, I just say the following. We have lots of deficits here. Interest rates are very important. The Treasury, of course, is going to have to wake up. Last I looked, 1.62 trillion deficit for the first 10 months of this fiscal year. Unbelievable. And interest on the debt this fiscal year, 10 months in, it's already up 15.5%, 15.5%. Those numbers alone should make us definitely be paying not only close attention to interest rates, but also how some of the rating agencies, many have dismissed, well, exactly what they may be paying closest attention to. Kelly, back to you.
Rick, thank you.
Oh, I'm sorry.
Yeah,
Wait,
please.
I'm sorry.
What do you see? 'Cause
Initial
it sounds
claims.
like claims, not quite as positive.
Oh
What
my
do you
gosh,
see?
248,000, 248,000, and continuing claims 1,684,000. My apologies, viewers and listeners. Got so caught up in CPI. 248,000 actually is the highest level, believe it or not, going back to the last week in June when it was 249,000. And continuing claims, much too well behaved, and maybe that's some of the stigma why interest rates have been a little more stubborn on the long end. 1,684,000 goes back to the 1,679,000 that we had in the second week in July. We have not been over 1.8 million now since the last week in April, which really speaks volumes about how the labor market statistics are confounding many, including me on many levels. Now, back to you.
Thank you very much, Rick. Let's get to our econ panel for some instant reaction. The market, by the way, hanging on to about a 0.5% gain here at the open and a 1% gain for the NASDAQ. Michael Strain is here. He's American Enterprise Institute's Economic Studies Director. Angela Hanks is Demo's Chief of Programs and a former Biden administration Labor Department official. Steve Leisman is here on set with us. Rick is still with us, and Mike Santoli joins us from the New York Stock Exchange. Welcome to everybody. Steve, I'll just start with you for what jumps out as the most impactful.
What jumps out is the Fed watchers just took off the month of September.
Completely.
Well, not completely, but there had been a 13, 15, 20% probability of a rate hike in September. That has now plummeted to 7.5%. The November hike had been up 30, 35, as high as 40%. It's now 26%. So they're still on guard for November, but they're basically bringing down that probability. And I think it's a combination of a little bit higher on the jobless claims, although you want to be a little careful in the summertime because there are layoffs. But as Rick pointed out, the continuing claims numbers doesn't go up. So this a story about what's happening with the job market remains an issue. And then you look at some of the internals on the inflation report. You got that used car decline that people have been talking about. Actually, new vehicles were down as well. Shelter is a little interesting here. It did tick up to what I'm seeing here, 0.5 versus 0.4, but it's a step down from the numbers that we had. That's owner's equivalent rent. Airline fares plummeting 8.1%. The issue of commodities and energies going down, we know they have ticked up, but overall, I think this is in line with the idea that inflation is coming down, not as fast as it had been coming down,
right.
And that the Fed is willing to sort of let this one at least ride, as long as there's not any particular surge here. The Fed has said it's going to be a bumpy road. They don't look for it to be linear. As long as we're moving broadly in the right direction, I think it's going to be okay with them.
Let me offer this tweet from David Rosenberg. This was earlier this morning, but he said, you know, if CPI rents do trend like the recent report from the San Francisco Fed indicated, headline inflation in a year could be half to 1.4%. For the core, Bill Ackman, he said, is destined to be as offside on treasuries as he was on Herbalife. Of course, Michael, you remember, Bill Ackman had just about a week or two ago said he is shorting, especially the long end of the treasuries, thinks 5.5% maybe for the 30-year yield. What's the significance of this morning's data, Michael?
Well, I'm a little less sanguine about it than I think the bond market is. I mean, what I see is the second month in a row. So I'm focusing on core CPI 1 month change to kind of avoid the problems of looking 12 months back with base effects and things of that nature. And I don't see an improvement from last month. We ticked up 0.2 of a point in July, ticked up 0.2 of a point in June. You know, that to me, you know, could indicate a downward trend. Certainly 0.2 per month is less than what we had several months ago. But my worry is that, you know, maybe we were at an economy with 5% underlying inflation. We've now gotten to an economy with 4% underlying inflation. Financial conditions aren't tightening. And so I don't think we can stay at this level without further interest.
All right, so we can check back in to CNBC, but the bottom line is that this was actually overall a good print, but there were certain parts of inflation which, again, continue to linger on. So we did see, let me just bring that over. So month over month, 0.2% for headline, and core also increasing 0.2%. So in line with the consensus. So that's going to be over here, 0.2 and 0.2. Year over year, we came in at 3.2, which was below the expectation, but again, increasing from versus the prior number from 3% to 3.2 on the back of shelter, which obviously increased 0.4% year over year. Right now, it's up a little bit over 7.7%, which we'll take a look at in just a minute. So again, shelter, as you can see down here, 0.4% and 7.7 over here. Rent of primary residence, 0.5% annualized, it's over 6%. And owner's equivalent of rent, it's 0.4%. Again, that's also 7.7% increase on a year-over-year basis. So that obviously continues to be a little bit of a problem. Airline fares did drop over 8.1% in the month of, well, June to July. And then obviously we did have energy increase 0.1%. I was actually surprised to see energy not increase as much, but fuel oil did increase 3% versus the actual gas prices at the pump increasing over 8%. And then we did have utility pipe gas service also increasing 2%. So of course, last month it was down 0.4. The months before that, 7.7, 3%, of course, in the last 1 year. From July to July, it is down over 26%, significant deflation for fuel oil. But of course, 3% increase month over month from June to July. But overall, the numbers came in pretty strong. Now, the market right now is still pricing in no hikes in September, so 84.5% probability that the Federal Reserve is not going to hike. And then in November, they are pricing in at least a 31% probability that we're going to see 25 basis points from the Fed. 5.5 to 5.75%. So we're going to get very, very close to 6% interest rates in November if, of course, we do see a 25 basis point hike. Now, jobless claims came in a little bit hotter, 248,000, so almost a 250,000 files or unemployment benefits filed in the last week versus 229,000. And then, of course, the prior number was 227,000. So we are starting to see a little bit of an uptick in jobless claims. And that, again, is the potential lag effects that start to play in with respect to higher interest rates. Manufacturing payroll was down 5,000 in the last Friday's jobs report. That is a telltale sign. Construction employment, again, construction and manufacturing, those two leading indicators for potential contraction in the economy, because if those jobs are not being added, if those are actually going away, that just goes to show that we are going to come to a potential stop, or really we're going to start stalling with respect to the labor market. So a little bit of a mixed report, I would say. Overall, this is still bullish on the surface, but under the hood, again, I guess there's still some lingering factors with respect to shelter not coming down. Energy starting to show some signs of potential gains, and that's why headline was higher versus last month. But core definitely coming down because it doesn't include for energy and food, right? So it only includes for shelter. But right now the market seems to be giving up on some of those gains, and we're starting to come right back down. I heard Bill Ackman is shorting the long end of the yield curve, and he expects the 30-year treasuries to be well over 5.5%. I think in the short term and intermediate term, it is possible because TLT obviously has been going down, and that's the thesis for Bill Ackman to be shorting TLT. But of course, I'm long on the bond market, but not for the short term though. Like I've mentioned this before, I think that's only when we start to see interest rates get cut starting next year, because right now there's significant imbalance between the demand and supply. We're seeing the US government, the fiscal policy side of things, the Treasury Department, literally doing these crazy debt issuances of over 800 billion, almost $1 trillion each month in order to operate, in order to continue to run through their fiscal deficits. But eventually, once we get to a normalized period, because for the first 3 months, for 6 months actually, there was a lot of debate of whether we need to raise the debt ceiling, suspend the debt ceiling, what's going to happen. That's one of the reasons why, of course, Fitch and Moody's and all these credit agencies have also downgraded the US from a AAA down to AA+. But that being said, once it normalizes a little bit, I think that's when we start to see interest rates normalize and come down, eventually getting cuts in 2024. And that's when the bond market will start to recover back upwards. But I think short term, intermediate term, I wouldn't be surprised if Bill Ackman is indeed correct with his analysis of potentially shorting the bond market. So we are trading today. Kevin, thank you so much for joining. Appreciate it. And let's see. I think if Cardi isn't live, nope. Just listening to what they had to say, but I'm doubting these reports more and more now, but we'll see. Red today definitely is what Sumit also saying. Brian, core is trending down. I'm happy with that. Strong jobs with slowing inflation. Hope it continues, Brian says. Yeah, so this again solidifies a little bit of that soft landing scenario, but there's certain things to really be paying attention to. For example, energy prices. They're on the move higher, right? 3% increase in fuel oil. And of course, not to mention that we are still increasing for crude. I mean, it's now almost at $84 a barrel for the month of July. Actually, for the month of August, we are up another 2.5%. That's going to show up when we get that report in September. So that's number one. Shelter prices not really coming down. We're not really seeing any type of deflation or even disinflation for shelters. If you come over here, you'll notice that we are, obviously leveling off a little bit because of those comps, but we're still increasing on a month-over-month basis. So we are at 7.7% at the moment. Energy prices, you can see that tick higher from negative 16.7 to negative 12.5%. Of course, if it crosses that line again, we are in positive territory. And then not to mention food, which again is slowing down significantly. It's showing signs of disinflation, but still up almost 5% year over year, and month over month was also up close to 0.2%. Annualized, that's really not that much. That's a little bit under 3%. So that's where we are. All items ticking higher from 3 to 3.2, and core trending lower, which is good. But it's a little bit of a slower pace, but it's still a beat, right? It's still a beat from a consensus standpoint. So David says they raised the expectation to 3.2 from 3, and we hit 3.2 exactly. It's hard not to believe the game is fixed. Yeah, I think it's all about perception, right? Obviously, we have to look at it from a year-over-year perspective, and then what the expectations are. I tend to kind of disregard what the expectations are, because at the end of the day, expectations are not really that helpful. And what we have to really look at is on a year-over-year basis. Like, for example, like if a company reports earnings or revenues, like for example, SMCI, right, Supermicro or Enphase, they can grow revenues and earnings by 40%, 50%, and earnings can also grow, but the stock can still drop 20%. Why? Because they missed on those expectations, right? That's why I think expectations are a very, very flawed way of looking at companies and these earnings and these inflation data points, but instead just looking at it and comparing it to what the actual was same time last year, same quarter last year, whatever. There's different ways to obviously look at it, but I think the perception with a hit or a miss is what drives sentiment, which is what drives price action. Yeah, SMCI down 23%. So we'll do a video on that very soon here. Are you buying Technoglass, Robo? So it's again, it's coming down to a very strong support. I will let you do your due diligence, but for me, I think it's worth looking into. I wouldn't mind starting a very small position, but it's also a value stock, right? It's a very defensive company that does pay you a little bit less than 1% in dividends. But of course, if the valuation comes down to very, very cheap levels, which, again, we talked about this in our video, but of course, if it does come down to that 300 SMA in the $32, $35 range, then yes, absolutely, it'll start to become a little bit of a no-brainer stock. But even right now, from a swing trading perspective, and even from a long-term investment perspective, I think Technoglass is worth looking into because it's a defensive company. It's a high-quality business. You've got very little net debt, very strong current ratio, quick ratio, excellent margins, consistent share buybacks, and then of course, you've got a profitable business, positive free cash flow, good margins, and the growth is also expected to continue. Again, it's not a high growth stock, so unless you are looking for a value, more defensive company, Technoglass may not be for you. Srinivas, hi Kadi, how are you? Where are you? So hey, doing great. Thanks so much for asking. Like I said earlier, as I was saying to everyone, my family was visiting, so I was just been traveling a lot, just going back and forth, running around. We had a really good time, so I really appreciate your guys' patience and thank you so much. And I'll be posting at least 2 to 3 different members-only videos later this weekend on Patreon, and there's going to be 2 to 3 different trade ideas also published because I'm looking at a couple different stocks that I think are very interesting because of the trade ideas and the setups that they have from a risk-reward standpoint. So those videos will be posted later this week, so around this weekend. I'll definitely make sure to post those. But yeah, no, overall, it's been great. I've just been living out of a suitcase for the better half of the last 3 months. But no, it's time to finally slow down and settle down and just definitely get back into it. So is now a good time to jump into long-term U.S. bonds? So Frank, depends very much on what your strategy is, right? So if you're looking to be a little bit more defensive and you don't want that market volatility and you want to protect your capital, yes, I think bonds are some of the safest assets out there. They're risk-free, right backed by the U.S. government. But again, there's some long-term questions with respect to that debt and servicing that debt. But that's neither here nor there in terms of short-term intermediate analysis. That's more like long-term sort of concern that I have, right, with respect to the U.S. debt and how they're going to finance all that. Ray Dalio obviously covers that in far more detail than I, but yes, from a short-term perspective, medium-term, again, depends on your maturity. So whether you're going for 6 months, 1 year, 3 year, 5 year, whatever, it's going to be safer, right, compared to obviously the stock market. So, all right. Caddy's been busy starting his OnlyFans. You guys are hilarious. Supermicro or Fortinet in recent dips. So Fortinet I would pick over SMCI. Actually, SMCI is pretty solid too. Like I guess it would be both of them. But you can see that Fortinet also gapped down pretty heavily, right? I mean, great companies can drop like this. It's not a surprise. It dropped 25% and now it's at that resistance. So we'll go ahead and turn this level into a resistance, $61, $62. So those are going to be some levels to watch. And there's no company that is immune, as we've already talked about. Fortinet's a fantastic business, but the valuation was way too high. It still is, right? So I mean, it's trading at 44 times earnings, a little over 9 times sales, 21 times cash flow. So it depends on the analyst, depends on the investor. If you're comfortable paying these multiples, by all means, go ahead. But of course, if you are like me, and if you want some deals, if you want to be really, really cheap about it and want coupons, then you'd much rather wait for better prices. Nextera Energy. So we actually talked about Nextera Energy in the past. It's a phenomenal renewable energy sort of business. Again, very, very value oriented. And I forgot, Nextera has won many awards in a certain category. Can't remember right now, but this is a company that we have analyzed, and very strong support here at $67, $68. It's got a pretty solid yield of a little bit over 2.7%. You've got consistently growing revenues. Margins have decreased a little bit, but it's a profitable company. Quarter over quarter, again, profitable revenue growth, earnings growth, underperforming this year. But we'll take a look at this company in more detail. Decent valuation, 17 times earnings, 17 times cash flow, and a little over 6 times sales. You got some good margins, some decent return on assets, equity, and invested capital. The balance sheet is not that great, unfortunately, so they are sitting on over $70 billion of net debt. So yeah, I'd be very, very careful from a long-term perspective, right, for Nextera. But it does starts to make sense from a swing trading perspective. Oversold RSI, oversold MACD, trading at a support. It's been selling off quite aggressively, trading at a very important support. It's bounced off of that level not once, twice, 3, 4, 5, 6 times. It's bounced off of this level at $67, $68. So from a swing trading perspective, yes, would consider this. Long-term investment, maybe not at all. So quick thoughts on HIM's earnings. We'll see if we can do a video on HIMS as well. I've actually done a couple of videos on this. We've talked about this stock before. But $4, $3.96 is going to be that support in case we break down below that 300 simple moving average. And when it comes to earnings, looks like they beat on EPS, beat on revenue. Not sure what the guidance was, but let's see. But we did get a price cut on Hims and Hers down to $10 from $12, maintaining a whole rating. And let's see, they reported 207 million, beating analyst expectations, increase of 83% year over year. And subscribers also grew to 1.3 million, 74% increase year over year. The company raised full year 2023 revenue guidance between 830, 850 million, and third quarter revenue anticipated between 217, 222 versus analyst expectations of 213. So you've got a revenue beat, earnings beat, guidance beat, raising the guidance. And then Credit Suisse analyst Jonathan Yin reiterates Hims and Hers health outperform rating and $14 price target. So there's a lot that's going for Hims and Hers, but it's not really being reflected in the price action at the moment. Pre-market just up 1%. 300 SMA is going to be that level to watch. Resistance up to 15, support down to $4. It's got a pretty wide range because it's a really volatile stock. All right, have you done Tesla? So Michael, not yet, but of course we talked about Tesla in our yesterday's market update. 240, very, very critical level, right? A really important level to watch for Tesla. Came down to 240, 190 yesterday, bounced off of that level, pushing up over 1.3% pre-market right now. Resistance all the way up to 275. Support, like I said, 240 is going to be that level. And right now, we've got covered calls on this stock, which are obviously doing really well, considering that Tesla is either trading sideways or going down. So Vault, I don't currently have positions in either SMCI or Fortinet, not yet. Supermicro, I think I've owned it once, but then I also talked about how it's really gotten crazy with its valuation, and of course the run up over 300%. So then I obviously got out, I believe, and then now I don't have a position. Fortinet, I just never have owned that stock ever, and it's because it's just got away and then never really came back. But now it's starting to come back, but the valuation is still a little too high. Shino, can I increase my positions on Palantir and SoFi at current levels for the long-term average price $12 and $6 respectively? So, when it comes to dollar cost averaging, obviously we've talked about how when it comes to investing, you want to make sure that it actually moves your cost basis, right? So for Srinivas, your average is $12. Right now it's trading at 15. I think 1379 is going to be a much better support level, but then it also, what matters is how far into your allocation you're already in, right? So let's say that, for example, you want to own 1,000 shares of Palantir, right? That's your goal. That's your target allocation. You want to have 1,000 shares of Palantir at your fair value. Let's say that's $10. So you want to have $10,000 invested in Palantir. And let's say that you buy 200 shares to start that position, right? So right now you're 20% of your way in to an entire position that you have. So you can obviously have the liberty or have the flexibility to buy another 800 shares. Now you have to decide, right, what prices are appropriate. If your fair value is at $10, you obviously want to buy it at 9 or 8 or 7 or 6 because you want to buy it at undervalued levels compared to your fair value. But if you want to buy at 15, if you're really feeling that FOMO, if you want to really satisfy that FOMO, maybe you buy a couple shares, 15, 16, 17. Obviously, the price is starting to get away a little bit, but you also don't want to increase your cost basis to a point where it's like close to the market price, far away from your fair value, because that lowers your profit margin. So there's a lot of different variables at play here. So you have to ask yourself simple question, what's my position size? What's my target position allocation? So for example, in phase right now, I only have a couple hundred shares and my plan is to actually buy a lot more, but I will start buying a lot more aggressively. I don't even know if I have a couple hundred shares. I think it might be just 100 shares. But my goal is to obviously get inside that green rectangle, like that good deal area. And that's when I can start to be a little bit more aggressive, start selling puts, generate premiums, and lower my cost basis even further. That's when you actually make a dent, right? There's no point buying every dollar down, your dollar cost averaging. It's not really going to help move that cost basis. You want to have that separation between the price and your cost so that you can actually make a dent in your cost basis. So yes, Alibaba, we can take a look at those earnings as well. Baba is on the move, so we'll take a look, scratch the itch. Yeah, Google is the only one, Magnificent 7, that is near its intrinsic value. Feel free to talk more about it. So I would say that Google's sub 100 is really the fair value. So I would say it's 30% expensive right now, 30% premium relative to its fair value. Of course, Apple is, I would say, a little bit more than that. We've got Meta way more than that. Tesla, Nvidia, don't even get me started. AMD, I would say AMD is far more, like, I think it's a lot closer. Maybe not. Let's see. Yeah, 36%. So AMD, Google, I would say they're 30% away from their fair values. Amazon's closer to 40% away. Microsoft is certainly a lot away. So, and Netflix, of course, way too much. So yeah, Google, AMD, I would say are the closest, but even that is like a 30-35%. So AF, I don't agree with you, Caddy. Sometimes I actually average up because I want to build up a position in a high conviction company. So there's nothing wrong with that, right? And I respect that you disagree with me, and that's a good point. But obviously, if you're averaging up, right, you're moving your cost basis higher, and it depends on what prices you're paying, right? So if you are, let's say that your fair value is at $10, right, and you bought the stock at $6, and then if the stock goes up to $8. And then you're buying it, moving up your average, that's fine because it's still undervalued, right, relative to your fair value. But I think the disagreement where I would have with you is that if your fair value is at 10 and then you are averaging heavily in 15s or 16s or 18s, right, that's way, way far up. Like that's 60% higher than your fair value. That's when you're actually moving your cost basis above your fair value. So the goal really is to keep your cost basis as close to the intrinsic value as possible. Ideally even at undervalued levels, so below your intrinsic value as possible, so that you're able to take advantage of that increased profit potential. Because at the end of the day, it's not really the company that determines how much money you make. It's the price you pay for that company, right? You can have a fantastic company, like I said, you can have the best company in the world, but if you end up overpaying for that company, doesn't matter how great it is, you will not make money because that margin of profit is already gone because you overpaid. Same thing happened with Elon Musk buying Twitter, right? Twitter was, and could be a great company. But the fact that he's already overpaid $44 billion, I mean, he's going to have to do a lot of work to make that work over the next 5 years, 10 years in order to actually make money. Twitter's valuation's already been cut in half, if not dropped like 60, 70%. So pricing is really important, right? What you pay for that asset is really what determines your future returns. All right, any thoughts on CrowdStrike? I stayed with this trade idea and I'm still up 50%. Wow, you stayed with CrowdStrike trade idea? Man, that's incredible. Congratulations. I remember obviously doing a trade idea on CrowdStrike a long time ago, but and that's crazy. Like we obviously only captured like 16, 20%, but the fact that you've stayed at 55%, that's incredible, Brian. Congratulations, man. I would say resistance at 167, and we've got a pretty solid support here. At 139, closer to 140. So you can see that previous resistance. So we were constantly getting rejected at that level. So once, twice, three times, got rejected, sold back down, and eventually broke out. And then this old resistance turned into a new support. So I would keep a close eye at 140, resistance at 167. That's really where the consolidation is happening. But of course, in case we see a breakdown below 140, then you may want to consider taking some profits, unless of course you're investing for the long term. But since you mentioned that you're swing trading, then of course 140 is going to be that support level to watch. You could also do a zero cost collar where you're selling a put and selling a call and buying a put at the same time with same expirations, different strikes, obviously both out of the money. And the way that works is that you're basically creating a insurance policy, right? So you've got a ceiling and you've got a floor. Below that floor, you're protected. Above that ceiling, you're also capped. But it's an insurance policy. It's zero cost collars are usually free, where you want to make sure that the premium you receive by selling the call versus the premium you pay for buying the put is equivalent. It's the same. It would be even better if you generate a net credit, but ideally you want this to be close to zero, if not a net credit, and that way you can generate a insurance and obviously have a risk-free trade. All right, so let's see. Let me just go over some other questions. Yes, so Kevin says it's all about position sizing. Totally agree. CrowdStrike is a great company, great product, great management. Keeping the position is not with high risk, in my opinion. Yeah, so I think that's a good point. And CrowdStrike is, I would say, after Palo Alto Networks and Fortinet, CrowdStrike is the best in the cybersecurity space. But the only thing is, obviously, they're not profitable, but they are turning the corner towards profitability, right? So eventually, I do expect them to be profitable. They've already started to show some profitability, like the most recent quarter, first quarter 23. 0.07% margin, only less than $500,000 in a profit, but hey, it's something. It's getting started, and eventually they can have better and better margins and eventually turn more profitable. All right, let's see. So buying option goes more faster, but you really know what you do. Yes, it really, I mean, with options, you really have to understand what you're doing. My plan for today is to start a position money vesting. I'm going to join the community Discord finally. Vault, thank you so much. Appreciate it. Yep, the link's going to be down below if you're interested in joining us, of course. Let's see. I know you don't take risk with money, but still I want to ask this question. Do you have any list for multi-bagger stocks in your radar? So when it comes to like multi-baggers, like, 10xing or 50, like 20, 30x, there's definitely a few that I'm looking into, but the thing is that the most amount of reward you're going to get, like in terms of those 10x or 20x or 50x, over a short period, I would say like a couple of years, are right now in a very speculative stage, right? There are companies that may not be profitable. There are companies that might be small cap, right? Because it's very difficult, right? Apple's not going to 10x, right? It's not going to go from a $3 trillion to $30 trillion company, right? That's just not feasible. There's just not enough money around for Apple to do that. Same thing with Amazon, same thing with Meta, Tesla. Even Tesla now to this point is not going to go from like, maybe it is. Maybe I'm going to open up a bag of worms here or a can of worms if I say this, but maybe it goes from $1 to $10 trillion, but the probability is low, right? It's really low. Don't start this, guys, okay? I'm not saying that it can't do this. The probability is low, right? It can certainly go to $10 trillion. But to get those 10 baggers, we have to look in the smaller cap, more speculative part of the market, which if you're comfortable with that risk, right? Because there's no free lunches, right? Everything comes with risk. Then obviously you can find companies in there, but it's just you have to weigh the pros and cons, the risk and reward, and see if it's worth looking into it, right? So for me, I think I've never really been a gambler, to be honest. So I like the idea of maybe allocating, $10,000, $20,000 into a small cap, micro cap speculative company. If it plays out, great. If it doesn't, who cares? But I've never really, that's just not me, right? That's just not my nature. And behavior is something that you can't really transform, right? It's some people like to do that, some people don't, and you just can't change that behavior, right? So Caddy's looking for a fight. Palantir made 10x, but again, it's B2B, right? So it's business to business. It's difficult for them to scale. As I mentioned, most trillion-dollar companies are B2C, right? So Palantir being strictly business to business, dependency on those contracts for revenue and earnings is pretty high. For those reasons, I think Palantir, that's the only reasoning I could come up with that Palantir may not get to $1 trillion market cap. But it's a solid potential for 10xing, 32 billion to 320 billion. I could see that for Palantir, but it'll have to scale the revenue and earnings dramatically, right? It'll have to go up in terms of revenues and earnings and just become mainstream, right? In terms of the software that they provide. SoFi, 5x, yeah, I mean, profitability is important, right? Howdy, come on, stock market is the biggest casino in the world. Palantir, SoFi are the only potential multi-baggers I know of. Wish I could find some others. Yeah, so Palantir, SoFi, I fully agree with you guys. Those are potential companies out there. Upstart, I mean, it's already at 500%, right? So 5x from those $12 range levels. I mean, in fact, last year, a couple of years ago, it went up over 1,700%. But then again, right? The more speculative you get, the riskier it becomes. So you can see how Upstart dropped 97%. It theoretically lost all its value, like all of it, almost all of it, from 400 down to $11, right? 97%. So there's no reward without risk, none, zero. There's no investment out there that comes with no risk. So all you have to really do is just analyze the risk. If you understand the risks involved, you are fine. The moment you don't, you get blindsided, and that's the real problem. Yeah, Milan, we haven't really been asking a lot of questions, have we? So maybe we should ask questions so you can, you guys, I need to start asking harder and harder questions. What I'll do is, for every hard question, if you guys get it right, that's 5 SoFi shares. For every normal question, that's still one SoFi share. And then for the hardest questions, the most difficult questions, 10 SoFi shares. I'm upping the ante. 10 SoFi shares if you guys get those questions right. So I'll work on drafting up the quiz, and then it's gonna be a surprise test in one of these live streams. And then we'll see. Okay. So Srinivas, what is the main motivation of stock buybacks? So there's also, return on capital. I'll make it 20. Fine, I'll make it 20 for the hardest questions. We'll talk about PayPal as well here. So baby boomers, life inside the cap. PayPal is solid or down big with good forward look. What do you think? So already talked about it again. PayPal, needs new management, needs new guidance for investors. And that's, again, lacking a little bit at the moment, but by the end of this year, we'll have some updates on what is going to happen with the management, and of course, moving forward with their business model and everything that they're looking to do in terms of expansion. Valuation's low. The company fundamentals continue to be strong. Earnings growth is still there. Revenue growth is there. But of course, the price action is not. Sentiment is pretty poor on PayPal at the moment. But That being said, 60 bucks is going to be that support for the company, and of course resistance all the way up to $69 to $70. Milan says your courses are paying off, my friend. So that's good, and that's the problem, right? Because of the fact that you're taking all those fundamental technical analysis courses, you're answering all those questions, and I'm able to buy 10, 20 shares, or I'm forced to buy 10, 20 shares every time. SoFi is at $9. Your coupon price be cheap, but not so cheap. Victor says, how are you liking Technoglass? You mentioned it once a while back. Yeah, so I did a video on Technoglass earlier today, so make sure that you do check that out if you have the time. That will give you a little bit more insight into the company and what the plan is. So earlier today I posted that video. But anyway, so QQQ's up over 90 basis points right now. We've got the SPY up 64, and the Dow Jones is up a little bit over 60 basis points as well. The yields are once again back under 4%. The volatility is down almost 5% at the moment. So selling off, and then again 14 levels are the one to watch. Crude oil continues to move higher above that resistance. Next target is going to be all the way up to 93.60 a barrel for crude. Yep, so fully agree. When the sentiment is low, but the company's still reporting some good quality numbers, that's usually the best dislocation in price and the value of the company that you can find for any stock out there. So yes, for PayPal, I think we're at that moment where sentiment's pretty bad. All right, so Nick says, I have an end phase trying to add more if drops more. So yeah, 120s, low 100s, I think is going to be worth looking into. Milan says, every single one, best money I ever spent. You wait, Milan. I've got a brand new course coming out on psychology of investing in money. That's all going to be on the qualitative aspect of investing and trading. That has nothing to do with numbers. We will not even go over a single number. Maybe some statistics, but not a single number. All of that obviously is covered in the fundamental analysis course, but the psychology part, you are going to love it. I have no doubt about it. It's going to go over greed, fear, FOMO, trading anxiety, risk management, everything to do with our mind and our psychology. And of course, money. And I'm also going to include some lessons on life from philosophy. All right, so thoughts on Disney. So let's do Baba, and then we'll do Disney. So Alibaba reporting their numbers up over 3.6%, beat on EPS, beat on revenue, mostly consolidating sideways. We got a resistance up to 105. So this right here is going to be that resistance level to watch for Alibaba. Support level is going to stay put at 77, closer to $78 per share. Again, lots of consolidation sideways in and around those prices. But overall, it seems like their company reported some pretty good numbers here. And let's see what they reported. So 14% revenue growth, strong performance in commerce, cloud, and entertainment. So Tmall Group revenue grew 12% year over year, just under $16 billion. International Digital Commerce Group revenue increased 41% to over $3 billion. And local services group revenue grew 30% year over year to just under $2 billion. So cloud intelligence revenue also growing, digital media growing, subscription revenue grew 5% year over year, primarily driven by increasing ARPUs. $5.4 billion in free cash flow, and ended the quarter with $80 billion in cash and cash equivalents. So I would say pretty strong number there. There's a little bit less of that geopolitical risk and uncertainty. So, Kitty. God, I've got so many names now at this point. It's just crazy. So Ferdinand Diaz, did you start a position in ASML in the end? Well, join our Discord and find out. But no, I did. I did start a small position. My plans to buy more eventually. But Enphase 143, is that okay, Ken Casper? I think that's a good level. But obviously the plan is to obviously do dollar cost average more as it continues to sell off, right? It's crazy how Wall Street can love a stock 6 months ago, hate a stock 8 months later, 12 months later, and then love it again 3 months later. It just goes back and forth. And with Enphase, the rapid increase in earnings and revenue and everything that we've seen from the company it's fantastic. So we've got a very strong support. Like I said, bounce off of that level in 21, bounce that level in 22. We're back at that level in 23. That's going to be in the 114s, 115s. Very strong support and area of demand. And the moving averages, everything kind of aligns well at those prices for end phase. So CPI going, Tesla going up with a bad CPI. So I wouldn't necessarily call this a bad CPI. I think it was a good CPI. On the surface, obviously, we beat expectations. So we came in line with expectations month over month and year over year increasing. For headline, a little bit higher, 3.2, but below consensus. And core also going down and below consensus. So overall, I would say that this was actually a good report. And we've got the NASDAQ and the S&P and everything up pre-market. So I don't think it's Tesla specific, but even Apple is up, Microsoft is up, Meta is up, most stocks are up pre-market. Ferdinand, I am in your Discord. Oh yeah, that's right. That's right, you are. Then I did send out trade alerts for that ASML. I did. Yeah, I did start a position in ASML. If you go to trade, if you go to alerts, if you go to investing alerts, there should be a trade alert saying new position, ASML, buying so-and-so shares at this prices. So you can check that out as well. Ian Holmes, when you're settled in, get time. Can you do a day in the life video? Trust me, Ian, you don't want to see a day in the life in my life. It's not that exciting. Trust me. It is probably going to be super boring, folks. It is going to be me waking up, literally getting videos done, work done, maybe going out to work out, getting back, having some coffee, and then that's it. Just reading, researching, analyzing most of the day, looking at charts, reading, that's it. And then towards the end of the day, doing live streams because the market opens here later, trading, and then having dinner. That's it. That's literally it. Because I also only eat once a day. So there's not going to be any food involved. There's not going to be any traveling involved. There's literally going to be me in a room reading and researching. That's it. Yeah, Milan, that would be great if I am in the same time zone as you guys. Would love to do that. What we can do is we can do like a live stream analyzing the options chain, going over the thought process, picking options. A lot of that is covered in the options course, of course, but and then also going over swing trading setups analysis, like going over the charts, going over all those things. What's for dinner tonight? Man, I'm cooking tonight, so I'm not that excited because my cooking is not that great. I mean, I'm still gonna try and figure out. I need to go to the grocery store, pick something up, because I literally just moved to this new apartment today in the morning. So yeah, there's nothing. There's literally nothing. My fridge has just water right now. So I'm gonna go pick something up. Whatever you guys recommend. What do you guys think? What should I actually be making today? David, this is already the most exciting part of your day. Yeah, I would say this is the most exciting part of my day. It's just doing these live streams and being able to talk to you guys. Milan still won't tell us where he is. I will, eventually. I will. I'm not in Dubai, though. But anyway, so about 12, 13 minutes left for the markets to open. Last week was red, as we talked about it. This week, so far, has been a little bit negative. Valuations are going to start to come into question because higher yields putting downward pressure on equities. We know inflation is coming down, trending lower, but some lingering effects of shelter. Now gas prices moving back higher. The market's expecting no hikes in September, but then potentially a hike in November. October, November, towards the end of October, early November. That's when the meeting is. So that's where we are. And, obviously tech has seen some insane rallies, but as I've mentioned before, the next 5 months, there's possibilities that the defensive sectors, a little bit more value-oriented sectors, end up performing a little bit better compared to tech. Tacos. Yeah, I mean, I'm looking for something simple to get started here, guys. Like, I don't want to be like, I'm gonna make myself a sandwich. That's pretty much gonna be it. Cause, like I said, it's gonna be something simple. I'm not trying to cook whole meals here. Not yet. Eventually I will, but not yet. Yeah, so if there's any companies, any stocks you want me to go over, we've already talked about a lot of them already, but any companies, any macroeconomic related questions, valuation questions, fundamentals, technicals, throw anything at me and I'm happy to go over, happy to answer, happy to elaborate, explain, whatever you guys want me to go over. So, all right, we can kind of thank you for the recommendations, guys. I really appreciate it. We can move on to something else. And again, if you do, put up with these tickers, like for example, CPNG or HDB or Fiverr, any questions around that is just going to help me a lot, and it's going to help you. So, what are we looking at, right? Technicals, fundamentals, like, are you looking for long-term swing trading setups? Like, what do you think of that? Like, what are my thoughts on this company? Like, what's the question, right? What's the question with that ticker? That's really important, because otherwise I'm just like shooting in the dark here. Order Chinese carryout for dinner. I don't have a car, so I'm not going to be able to do carryout. Won't be driving to that place. Okay. Numbers are impressive. HIMS. Yep, so we went over that very, very quickly. HDB, planning to start a position. Your thoughts on NEO's future. So, for the NEO, we've talked about how they're doing so many things at the same time, right? They're doing a lot of things. They're launching new models. They're expanding into different countries. I think the main focus for NEO needs to be on profitability, like making sure that they do fewer things, but they do them well, so that they can achieve profitability and then expand into other areas of the market and then start doing different models and all those different things. But right now, obviously, NEO's got too many things going on. For those reasons, they're burning through a lot of cash. If they're able to execute well in the next 6 to 12 months, they're able to achieve profitability. Only then I see NEO being very successful in the future. If not, then this same behavior continues to happen, and that's going to be very unfortunate, where they're going to be doing 10 different things and none of them they're doing well. So very strong rallies. We talked about, potential pullback and RSI MACD being very overbought. So we're starting to see that sell-off here, which is normal. Sitting at those moving averages, if we do see that breakdown, I think 10.60, $10 is going to be that next support level to watch. ASML, Fiverr fair value. So just waiting for them to be profitable, right? So as soon as they become profitable, then we'll have a much better understanding on the fair value, the intrinsic value, and it looks like they are reporting some quarters with profitability, albeit really, really low margins. But eventually, once they turn the corner, then we'll calculate the fair value on them. ASML is a long hold. I love ASML. I've already mentioned that they are at the core of the semiconductor sort of ecosystem, and the equipment that they build is essential to the manufacturing and development of chips and semiconductors. And precision is really important, and ASML provides that. So no doubt about it, the company's fantastic, but of course, prices 687, 700 is a little too high. I don't mind starting a small position, getting a little skin in the game, which I did, but of course, I would dollar cost average a lot heavily at lower prices. So Jinvest, thank you so much. I appreciate that very much. You are the best host, both in knowledge and communication skills. I really appreciate you, and I'm glad able to provide you with valuable info and content that you enjoy. So thank you so much for that. Do you see CLS as a strong value play? So let's take a look. I don't think I've analyzed this company ever. Market cap's at 2.7 billion. Profitable, low margin, so I'm expecting it's a hardware company. It's definitely not creating software or services. So engages in the provision of supply chain solutions globally, equipment manufacturer, service provider, operates the following segments: advanced technology solution, connectivity, clients, cloud solutions. Advanced technology solutions segment includes aerospace, defense, industrials. Okay, they do provide, and they're based out of Toronto, Canada, huh? Interesting. Listed on the NYSE, 83% rally this year. That's crazy. Trading at still 15 times earnings, a little over 8 times sales. Again, margins are low, right? So that's something that you would expect because gross margins are sitting at 9%. Net margins are a little bit under 3. Return on assets, equity, and capital is decent. Current ratio is 1.4. Quick ratio is low, 0.63. And they don't pay out a dividend. So I wouldn't consider this a value stock. If anything, this is like crazy growth in the stock price, right? Up 100% since May. But it's also very, very overbought at the moment. So I would allow for it to settle down a little bit. This is certainly a company worth looking into, no doubt. But it's just moved up a lot, right? It's more than doubled. Frank, you should have mentioned this before. This should have been like a May stock you should have mentioned. Maybe you did. I skipped over it. It's my fault. But no, this is crazy. This is a very strong rally. 21 EMA, just under $19. That's going to be that support level. So Victor, yep. So listen to Neo Victor. It would be fun to do a live stream with Caddy on Neo. Yeah, no, that's a great point, Aaron. Thank you so much for joining. And we'll definitely have a long overdue live stream. We'll definitely talk about Neo eventually. It's just that, like I said, I've been traveling a lot, living out of a suitcase for the last 3 months. But we'll definitely do that. And it's always a good conversation to be had, right? There has to be some pushback. There has to be some disagreement. Otherwise, you're not growing, right? If you have to surround yourself with people that actually say no and kind of disagree with your views. That's how you gain perspective. And that's how you grow, right? So, no, I totally respect it, and I think it is very important to have those conversations. Thank you, Caddy. You're the best. Without you, I had been lost a lot of money. Ken, thank you so much. Appreciate that very much. And I'm actually very excited. I'm super excited to do that psychology of investing in money course because it's going to include so many things related to the psyche of price and value and our emotions. And the goal really is to get your emotional intelligence to performing at a very, very peak level in that. So I hope, and I'm really hoping that I'm able to achieve that through that course. So super excited to get that out there. Yeah, it's going to have a lot of different things that it's going to touch on. And we're even going to do like a 10 or 20 question survey so that you can kind of figure out yourself, right? Because this is all qualitative analysis. It's all intangibles. Like I can't quantify your risk tolerance, right? There's no number out there that you can tell me that will tell me how your risk tolerance is, right? What's that quantitative value? Because it's all intangible. You only feel it from inside. So that's why we're gonna touch on that. So biggest regret is not getting Adobe in the 200s. I knew it was a buy when Stigma News came out and dropped like 30%. Yeah, so Adobe, as soon as they started incorporating AI into their business and of course started to include a lot of these other features, it's just gone crazy from 275 to over 500 plus. Once again, 90% rally. I'm still a little skeptical with the competition, right? So DaVinci Resolve definitely has made a lot of waves. It's made a lot of dent into Adobe's market share. It's still growing, no doubt, but I'm even considering at this point switching over from Adobe to DaVinci because of the one-time fee. Adobe just charges way too much, and I would just kind of like reduce the tier only to PDFs and just regular stuff as opposed to the Premiere Suite, like the Adobe Premiere Suite with Premiere Pro, After Effects, all those things. But of course, it's just a comfort thing, right? Once you get comfortable with something, you just don't want to make that change. But eventually, I do plan on learning DaVinci Resolve. Psychology of money, no emotions allowed. Yes, so in trading investing, that's the whole point, right? How to disengage with emotions and of course, be rational with your analysis. But there is and there needs to be a level of man, that's a tough word. There needs to be a level of reasonable that you need to be, right? You need to be a certain level of reasonable in order to actually be successful long term. Because if you just play by the rationale, if you just play by the numbers, just play by the spreadsheet, oftentimes that's also not the best thing to do. So it's kind of finding that right balance on when you should be like checking in with your gut. You've got that gut feeling, and then when to trust the numbers. And it's that sweet spot. You can't rely just on the numbers and expect your emotions to be fine when that volatility happens. Then also you can't just have that gut feeling without checking the numbers. So it's kind of finding that sweet spot. All right, so market's going to open in about a couple minutes here. Quick update. This has been, again, a very long live stream because of the CPI numbers, but it's been long overdue because of the last week that I've been traveling. But thank you so much, you guys. Really appreciate it. Make sure that you drop a like. Do me a favor. Just let's see if we can at least get up to over 300 likes here. We've got only 360 people watching, so easily achievable. Make sure that you drop a like here. And, of course, subscribe if you haven't already. I would really appreciate it. And we'll see how the markets react. The yields, the 10-year is back over 4%. So we're definitely seeing a little bit of a rebound in the 10-year at the moment. And, of course, the Dow, the S&P, and the NASDAQ still green, selling off a little bit intra-day. August and September, as we've already talked about, are a little bit seasonality-wise not the best months. So we've already gone over Alibaba. We've gone over Disney. I'll take a look at Dollar General and Target very quickly here. So again, if you go back a little bit, you should be able to find the analysis on both Alibaba and Disney as well. I liked twice. Kevin, that is removing a like. If you hit like and you hit like again, that's going to remove that like. So hit it again 3 times. Either once or 3. Always do it in odd numbers. Otherwise, it's going to remove it. Anyway, so Dollar General here. Obviously, after the earnings, selling off pretty aggressively. I would say 127, very, very strong support level. That's pretty much the pandemic level for Dollar General. And we've got other support sitting roughly at 160s for this company as well. You know, it does seem like it is forming a little bit of a... It's not really an ascending triangle, but it's... maybe it is a little bit, right? It's making some higher lows. We've got a resistance very strong at 172. So if you do break out above that level, it's got potential to rally up to 200. Because then we've got the gap to fill, and we've got these support levels to watch out for. So that's good. But again, it's got like a 1-to-1 risk-reward trade-off, right? Because if it does end up breaking down, maybe we've got a support down to 150. And then, of course, targets up to 200. So not exactly 1-to-1, but the risk-reward sure isn't worth it. Maybe it is. It's 2-to-1, but we're really just risking 10% to make 20. So one more for good luck, make it 4. I liked 5 times. Do target is good buy at these prices, Danny. So let's just go over to TGT. Yeah, so 125 I think is a very strong support level, an area of demand for target. So it was making a bear flag, so sell-off, consolidation for a very long time. Again, bear flag, and then a breakdown below this level, and then once again it's starting to consolidate sideways. So 125 is going to be that support for target. Anyway, so the NASDAQ here, up and open here, 88 basis points. We got the S&P 500 is also up a little bit over 71 basis points, and the Dow Jones pushing higher, up over 77 basis points as well. The yields are back over 4% at the moment. We got Tesla up over 1.7. We got Apple up over 82 basis points, and Meta Platforms also pushing up over 1% at the moment, with Microsoft up 1.3. So all Magnificent 7 stocks pushing higher, with lots of green that is out there. Alibaba, Disney, Roblox, Upwork, Datadog, Peloton, Zscaler, Fiverr, ASML, everything is on the move to the upside. But again, it doesn't matter where we open. What matters is where we close. So that's going to be it for today, everyone. Thank you so much for joining in. I really appreciate it. And it's nice to be back. And we're going to be doing, obviously, these live streams every day. And guess what? Now we're going to be able to live stream the Fed meetings, Jerome Powell's speeches. I no longer have to wake up to these crazy hours. We're going to be able to live stream the Fed meeting as well, the FOMC meeting, the Jackson Hole, all of that on this channel. So I'm super excited for that. Make sure that you drop a like, subscribe to the channel, link to our Discord, Patreon down below if you're interested in joining. And I'm going to be working on that Psychology of Investing and Money course this entire month and for the next few months. And it'll be out very, very soon.